Good afternoon, everyone. My name is Ra'a. I'm the operations manager here at MURO, and I'm joined with our director, Michele Romano.
Thank you, Will. Thanks for the invitation.
Very welcome. So today we are going to be talking about audit risk areas in 2026, and what we're seeing in practice. So the rules have changed, Michele.
Yes and no. Yeah, rules have changed. I mean, it's one of those things that I suppose the ATO has always been there looking at things, but I think today's focus is really to talk about what we know, what we're seeing,
Sure.
and essentially like what we need to think about. So yeah, so historically, audits have been focused on large businesses and high net worth individuals. However, with today, ATO is increasing their automation and record matching data systems, so they can now really capture a lot more information. So things we're seeing are, for example, like payroll reporting versus obviously employee tax returns.
Well, I'm going to slow you down there.
Yeah.
I don't mean to cut you off, but just to slow it down for everyone. So when people are getting reviewed, it doesn't mean that there's something wrong, right?
No, correct. No, it just means that obviously the ATO wants some sort of evidence.
Right.
So things like vehicle registrations versus FBT reporting can be an issue. The merchant terminal data can be an issue. Obviously, matching that with BAS lodgements. Okay, so if your cash and terminal systems don't match, and crypto and third party platform data, that's one of the biggest ones. So I think people just have to realise that a lot of this information is now being collected in the back end, and so therefore, when we say rules have changed, it's really the ATO has become smarter with their systems to be able to pick up a lot more information. So that's where that's sort of heading at the moment.
Right. Okay. So we'll break it down even further. So can you talk to us about some of the common audit risk areas? So you already touched on payroll and employer obligations. Do you want to just fill us in a bit more?
Yeah, so employer obligations has always been one of those things that you need to check in terms of PAYG withholding, superannuation guarantee as well, and the difference between employer and employer contractor classification, which I see as a big one. So, these continue to be a major focus of the ATO. It can require significant reconciliation work if we have to from our end. But yeah, we need to make sure that obviously if we're dealing with PAYG withholding, that matches with your payroll system and it also matches with your BAS statements that you're lodging.
Okay, so those major risk areas. And what about trusts and Division 7A?
The age-old trust in Division 7A problem, it's been there for as long as I can remember. And, trust distributions, like we all know, we're in that busy period at the moment, preparing trust minutes for most of you. We need to make sure that obviously the distributions match up and align with what we've actually said in part of discussion of your tax planning meetings. Loan accounts as well. I think what we're trying to see more of is that we need documentation and compliance with those requirements. So yeah, the major thing, which hasn't changed, but the major thing is to make sure that we have proper documentation and compliance records on file.
Is there anything to say about GST reviews?
Again, another one, GST reviews has really been in the pipeline since it came into existence back in 2000, and particularly where businesses claim large refunds. You normally have an audit pattern there. If someone's bought a property and claimed 100 grand back, generally it's a trigger for an audit. There's also, I suppose, when you have maybe some unusual GST patterns. Okay, so if you're claiming more than the norm, and really how the ATO pick it up is really from the different benchmarks. Okay, so they've obviously got benchmark data, and if they see that differs significantly from what's in your file, then that can also trigger an audit as well.
Right. Okay. Interesting. But an audit is not necessarily a bad thing.
No, I mean an audit is a review at the starting point. It's a review that normally they would engage us to have a look at, and then from there we would talk to you further if we need to provide information. So yeah, I mean it starts as a information gathering collection letter, let's say, and then if they want to progress it further, then it can go further from there.
And I know FBT is a big one for businesses. So how about you talk to us about?
Especially now, obviously, the FBT returns are due as well. So yeah, common review areas. I think that normally the ATO target are company vehicles. There's a lot of people that still seem to think that a company car is used 100% for business. Well, that may not be the case. Director benefits. If directors in companies are actually seen to be getting benefits that are not being taxed, and probably the biggest one is entertainment expenses. And unfortunately, yes, sometimes you would try and argue that an entertainment expense is legitimate for your business because you're generating more income or you're generating more business. But the reality, unfortunately, is that entertainment expenses are caught under FBT. So watch out for that space.
Right. Okay. Another big one actually for businesses is the R&D tax incentives.
Yeah. That's a big one.
Yeah.
The R&D tax incentives, the ATO is increasingly scrutinising claims. And, it's unfortunate because, whilst you would think that the ATO has put this out there to help businesses, it's sort of going the other way, and I think the most important thing with scrutinisation with the ATO is that you need to have supporting documentation. So, if you've got agreements, make sure that they're signed and documented. If you've got time records, make sure that you've got that data as well. And I think the other thing we're seeing is apportionment methodology. So when you're, for example, you're doing an R&D in a business, you need to make sure that if you're allocating time in your normal day job to an R&D event, you need to be apportioning that. Okay, so the ATO is pretty strict on that. They want to make sure that you're actually allocating the right amount of time to the R&D project, and then the rest of the time, obviously, to your normal run-of-the-mill business during the day. So, it's a crazy one, but unfortunately, that's what we deal with.
So we touched on this briefly earlier, but what do you think is the main thing that triggers reviews?
Okay, so I suppose the most common triggers that I can think of would be basically amending returns. Okay, so if we have to amend a return, that can go in the system, and the ATO can obviously then question potentially why we're amending a return. I haven't seen much of that, so it can be a trigger, but again, not a big one. I think maybe large refund claims is another one. So we don't have a lot of that. I think it's more with clients that are coming in with incorrect data and ending up with big refunds. That's obviously a target. The other ones that probably you need to sort of think about is more like a rapid business growth. Okay, so and again, rapid business growth, what we mean by that is if the business has started from scratch and all of a sudden overnight it's become crazy. Obviously ATO is always using benchmark data to compare and review things. So you just need to be careful and make sure that it's monitored. And I think we do work a lot with clients on their business and sort of backwards and forwards in terms of having meetings quarterly, monthly, and so forth. So keeping an eye on that shouldn't be an issue. The other one's probably like data mismatching between government systems. I think that's probably the biggest one. And I would say that I've gone so far as to know that the actual ATO are now sending out information to insurers. So, for example, the luxury item assets and things that you might be telling your insurer that you have that obviously the ATO don't know about. So things that essentially you're representing in tax returns and financial data that are not getting caught outside, the ATO have information on that. And again, we don't know, but it could potentially trigger a review.
Okay. And again, we know that there are costs associated with audits, but do you know of any hidden costs, or are there any hidden costs?
I'll get to that in a sec, but just probably so that our clients are aware. I mean, the key point takeaway probably from all of this, in terms of reviews, is that just remember, audits are triggered automatically. Okay, it's not generally through suspecting someone is doing something wrong. It's always getting information, the data, and then matching that up and making sure that they're come within reason, happy with them going forward. So just touch that point because it's important in a review. We
will do a final summary, I guess, but
so But to answer your question, yeah, the cost in terms of going through an audit, and hence why we did partner with a business called Audit Insurance, who obviously help with fees. So a lot of clients always ask the question, audit insurance, what's it for? And it's there to actually pay for the cost of us dealing with the ATO on your behalf. Okay, so I think if you're thinking about the other costs that are actually associated with audits and where those costs come from, and I think the biggest misconception is that the costs actually come from penalties. But in reality, the cost actually comes from responding to the review itself, and that's time where we're dealing with the ATO, we're dealing with client, etc. So some examples of claims that I can see would be one example is 70+ hour time spent on reconciling payroll records, as one example. Another one is multi-year payroll FBT liabilities. We've had to do some of those. And then R&D reviews is another one, requiring extensive document production. So, I think even where the outcome is there's no adjustment required, you still have to realise that there's significant professional time involved.
Absolutely.
And that's where these sort of hidden costs come from.
Well, it's also interesting, and I'm sure we could talk about this for ages. But I guess we'll just close on the main shift of this is that the ATO is not necessarily targeting risky taxpayers. It's more the advances in technology, as you mentioned earlier, mean that a broader range of taxpayers will be captured with this. So regardless whether mistakes have been made or not, anyone can be audited.
Correct, yeah. And I think, obviously, while we do our best with compliance to help lower the risk, it doesn't remove the chance of someone being reviewed. But again, having strong documentation, having effective processes, clear client communication, for me, are more critical than ever. Yeah, in a world that's changing with AI and with automation, it's just getting stronger and stronger. So we need to be aware. But again, we talked about the risks today. It's not something that's all of a sudden overnight popped out of nowhere. These risks are real and have been around for many years. And I don't think we need to worry, at this point. But just be aware that obviously, the ATO and the systems are getting a lot smarter, and we need to make sure that we're on top and vigilant.
Yeah, and just keep everything kind of recorded and everything, a strong database of information. So if you're audited, you'll be fine.
Rob, I just wanted to take the opportunity to, as well as just to alert all the viewers that we do have a Payday Super webinar coming up.
We do,
shortly.
Absolutely.
So watch the space for that, because from 1 July we've got changes again. I'm sure most of you watched the budget with Ruan Canio, the report. We're still waiting on information to come through the Senate on that one as well. But again, a whole rift of changes coming through in our world, unfortunately, whether we like it or not. But so Hang Ten will come to you with a payroll Payday Super presentation shortly.
Yes, wonderful. Well, thank you, Michele, for your time.
Thanks, Ruan. Glad to be here.
We'll see you all soon.